Morning. It is Tuesday, June the 30th. Here's what's on the agenda. The Supreme Court gives Fed independence a boost as central bank chiefs convene in Portugal. The yen hits a 4-decade low with traders on intervention watch again. And oil falls ahead of expected Iran-US talks today.
OK, let's talk about these equity markets and figure out exactly what is happening here. Really choppy session in Asia once again. Momentum's been struggling, picks up a little bit today. Euro Stoxx 50 futures are up by 0.6%. US futures not by quite as much. The story today surrounding what is happening with the yen. Tom talking about it there. We're at 84 levels, seeing a massive move at the long end of the JGB curve. And the Iranians are saying they will charge tolls in the Strait of Hormuz. They will do it with or without the Omanis. The Americans are saying that's not happening. Talks are taking place in Doha today. We'll look for the result on that one. But Brent crude is down by 1%. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. 7:01 here in London, Tuesday the 30th of June. So lots to talk about when it comes to long-end rates. The Japanese market putting that front and centre, the weakness of the yen, the weakness of the oil price, in fact, also with a 72 handle on Brent, as we've just been hearing. So lots to discuss when it comes to market moves. But let's take a moment to set the stage for the ECB and for Sintra, because this is going to be a big feature of our show this morning. It's going to be a big feature of programming over the next couple of days. And we have heard from the ECB's Christine Lagarde already. And going into this, I suppose one of the key questions that journalists were going to try and get a sense of is whether the ECB itself or others, ECB watchers, thought that the ECB had made a mistake, a policy error in hiking in June. And she's perhaps trying to get in front of that, saying that she's defended the hike in June, saying there's nothing she's heard since that would call it into question. And she seems to be trying to add a bit of nuance to the conversation about whether you look through geopolitical shocks or whether you don't. She says we expect more shocks and we expect more often to be in this intermediate zone between the shocks that you look through and those you respond forcefully to. And so maybe this is a continuing theme that we'll return to during the Sintra coverage.
64% chance to get a rate hike in September. The market's still pricing the possibility that we do see further hikes coming through. Lagarde's toning it down a little bit, but still, rate hikes are still coming. That's the market estimate.
She expressed confidence in the framework, the data framework that they're looking at. She expressed confidence, relative confidence in the resilience of the Eurozone economy. We're going to get inflation data, of course, from France and Spain and others throughout today, and then the overall number tomorrow. But also really interesting, in the context of this gathering in Sintra, is this huge decision by the Supreme Court on multiple fronts.
In the US.
For our sake, in the US, absolutely. But for our sake, the focus when it comes to central banking is on that decision to essentially carve out some level of independence still, because they've given the president huge powers over other regulatory bodies and other institutions in the US. But when it comes to the Fed, at least for now, allowing Lisa Cook to continue to serve. But the broader takeaway is that Fed independence, at least for now, has been reinforced by this ruling. It was the one institution to which the president has not been given those additional powers, at least for now. And that is hugely significant. Yeah,
you wonder if this reinforcing then of Fed independence, what does that do to the conversation around Kevin Warsh when he's there? What does it do to his reception? Fed independence was from a slightly different dynamic, but was a big topic of conversation at Sintra last time around with a different man at the helm of the Fed.
Walsh looks at this, he goes, independent central bank, I can do whatever I want. I'm in the seat now, let's go.
Tick.
Hawkish. Yeah. Like 50-50 chance we get rate hikes this year. Bank of America thinks we get 3 this year, I think. So maybe that's the narrative that Warsh is stronger as a result of this.
So all of that factoring into how you think about the Bank of Japan then and what is happening with the yen. So the Bloomberg Dollar Index is surging today up 0.2%. The yen currently at those 4-decade lows. And you were talking about the sell-off, particularly at the 30-year when it comes to JGBs. But across the curve, you're seeing that right now very pronounced on the 30-year with yields up close to 10 basis points at 394. So again, it puts the BOJ back into focus. Officials from the finance minister down have come out and talked about the currency again, but not with the most forceful language that we've heard previously. What is the new line for the finance ministry? What is the new line for the BOJ? We're at 162. Is it 163? Is it 164? How far do they let this go? It's helpful for the equity markets. Yeah. Exports have been booming, but clearly the inflation challenge is there. and the authorities of the BOJ as well in focus.
Yeah, and the weakness in the yen has us return many times to the question about how quickly or very slowly the BOJ will hike rates. And as you say, Tom, the language, our colleagues pointing out, the language is not like last time. It's not like April. It's not saying this is a last warning. Don't put your phones down, traders. Those are the things we heard in April. We're not hearing those now. And so there is this suggestion that maybe they're not setting us up for intervention. But I'll point out it is another US holiday on Friday. And sometimes that's been a time where you get bang for your buck.
Is the risk, and people are pointing this out, that we get a big explosive move to the upside on the US dollar? That seems to be a factor that you could certainly kind of put in. If you get multiple rate hikes coming through from the Fed, ECB sounding a little bit more dovish, BOJ standing to the sidelines. You've got to remember, in 84, we were at these kinds of levels. In 1980, we were at 250. So you've got a long way to go potentially in terms of where this dollar move could take us. So maybe there's still actually significant upside here for the dollar. And maybe that's going to be the thing that the market hasn't priced in. Where do the risks lie in the market at the moment? A much stronger dollar could certainly be the risk.
We're certainly hearing a lot of people linking the dollar and commodities and talking about the links between the two, and some commodities feeling the pressure from the strength of that dollar. Thinking about where we go on the commodities conversation then, have we learned anything new overnight when it comes to Iran?
The Iranians want to exert control over the Strait of Hormuz. The Omanis may or may not play ball. We don't know yet, but the Iranians are going to do it anyway. The Americans are saying they will not have that. That seems to be the game at the moment. The kind of the nuclear issues sidelines on this one kind of certainly feels like it. Talks are going to be taking place. We think today there has been some speculation the Iranians may not show up. But, yeah, that's where we are at the moment.
The only new thing I took away from that, our reporting around this overnight, was that actually the Omanis were meeting with President Macron in France yesterday, and Oman seemed to suggest, in that conversation at least, that they weren't supportive of the idea of working with the Iranians on tolls. So met with Macron in Paris and confirmed freedom of navigation with no conditions. Yeah. So does that tell us something about what the Omanis, the lengths to which the Omanis are prepared to go to get money out of this situation?
But again, is this the new normal for the Strait of Hormuz? You're going to get this friction. You're still going to get tankers, including super tankers, trying to make their way through the Straits. The US Navy is there and other navies to assist. Morgan Stanley saying you only need to get a return of 65% to pre-war levels to potentially get a glut in the oil markets. Morgan Stanley revising their target for Brent lower in the third quarter. 65%. I don't know how close we are to that, but you are seeing tankers continuing to go through the Strait with that assistance, with that aid. Are the oil markets, energy markets now set up for that?
They're probably not. But how short-term is that? Yes, you're going to get a glut as tankers return and we get loadings coming through, and that's going to be a story. But if you put friction into the system, are you going to get a higher oil price? Even if it's $5, $10 a barrel on the longer-term story, is that going to be the narrative that we're going to have to work with? Higher energy costs coming out of the Gulf, higher energy costs at the petrol, gasoline tank. Maybe that's the narrative. Again, we're still up on oil, and you've still got that inflationary impulse coming through from it. Yes, we are down from the highs, but we are still up from the lows.
Yes, I wonder which theme dominates at Sintra, back to where we started. Will it be, slight relaxation and slight satisfaction with the fact that we've got a 72 handle on Brent now, which is a lot lower than it was a few months ago?
Europe's got massive issues in terms of making sure it's got enough gas for the next winter. We are coming into this very, very low. We're going to have to probably pay higher gas prices. That's going to be inflationary. Sintra is coming up. We are going to be speaking with Philip Lane, ECB's chief economist. Olaf Slijpen is going to be joining us, the Dutch central bank governor. The Dutch are out after last night's football, as are the Germans, as are the Japanese. I'm just going to point that out as well. Pierre Wunsch, National Bank Belgian governor, is going to be joining us. And in London, Fabiana Fedeli, M&G Investments, Equities and Multi-Assets CIO. We'll get her take on what is happening.
Let's look ahead to what else we are watching throughout this Tuesday. Later, it is the US-Iran talks expected in Doha, both sides at loggerheads leading into those conversations, but they are expected to take place in the Qatari capital, of course. The UK will finally announce its defence investment plan announcement, delayed, but we will finally get that later today, so some scrutiny on that. At 10 a.m. UK time, Italian June CPI inflation and Germany's June CPI later as well at 1 p.m. 3 p.m. Meanwhile, we're going to US consumer confidence, and with the gauge on the labour market, JOLTS, so job openings data coming out stateside, and on the earnings front, we get earnings and numbers from Nike.
Yes, we do. We get numbers from Nike. We'll certainly remember that. That'll be a story for us tomorrow, certainly, won't it? We have Eurozone CPI. Yeah. You've already mentioned this, Tom. We are expecting it to come down. So if that sets the mood at all for Sintra, expecting, I think, the overall Eurozone number tomorrow to come down from 3.2 to 3%. But we'll get the French number, we'll get German numbers, we'll get other numbers today. So that's the inflation story. I'm thinking about the defence story as well in the UK because it's been such a topic of conversation over the last few months and weeks and has resulted in, changes in cabinet, which then arguably led to the downfall of a prime minister. So, certainly worth thinking about.
We're going to get new numbers announced today. Burnham appears to have signed off on it. It's going to be up, but it's still not going to be as high as the military wants it to be. We're going to see more being spent on drones. This is still a struggle for the UK to fund defence at an adequate level without making cuts elsewhere.
How are they going to join the dots between 2.6% in 2027, that's of GDP, and 3.5% in 2035?
Some reporting over the weekend.
We look to this report to join some of those dots.
Yeah, so Dan Jarvis, the new Defence Secretary, relatively new, of course, has managed to squeeze some more money out of the Treasury. We know that negotiation has been incredibly tense. There was some reporting over the weekend that maybe Burnham is in favour of defence bonds, so we'll see if that becomes more part of the narrative as well if he becomes the Prime Minister.
Coming up. Shipping giant Maersk boosts its profit forecast for the year. We will discuss what's driving the improved outlook. Plus, is the SAAS-Pocalypse over? We'll be speaking to Mike Cannon-Brooks, the CEO and co-founder of software company Atlassian. That conversation is coming up a little bit later. Up next, we go live to Sintra, where policymakers are meeting for the ECB's forum on central banking. Philip Lane, the ECB's chief economist, joins the programme after the break. If you want to get involved in that conversation, or indeed any of the others around this desk, IB plus BBTV Go. That is the function to use. As the sun rises here in London, it's a little cooler this week, isn't it? This is Bloomberg. Welcome back. This is the opening trade. Just coming up to 15 minutes past 7 here in London. And the European equity market picture looks like this. Fairly muted, actually, for London. Elsewhere, including over on the DAX, we do see some positivity, up by 0.6%. Tech stocks, no doubt, in focus there. Nasdaq futures up by 0.3%. The Asia session up by 0.9%. And the US session, Guy, we saw it continue to gain after European markets had closed.
Absolutely. So we'll factor all of that into our open as we get to it very shortly. Before we do that, we've got some great guests coming out of Sintra, which kind of kicked off last night. European Central Bank President Christine Lagarde kind of kicking it off, saying the euro area has grown more resilient to external economic shocks. She spoke at the annual forum of the central banking group that is the ECB, takes place in Sintra, Portugal.
The euro area has also weathered the largest US tariff increase in almost a century, as well as what the International Energy Agency has called the largest oil supply disruption in history. That didn't go without a significant cost. It has been substantial, but the economy has not been derailed.
OK, that was last night's Lagarde kicking things off. Today we get down to business, real business, and figure out exactly where this European economy is going. To answer that question, I hand it over to Francine Lacqua.
Thank you so much, Guy. I'm delighted to be joined by Philip Lane, Chief Economist, of course, and member of the Executive Board of the European Central Bank. Mr. Lane, thank you for joining Bloomberg this morning, bright and early to get us started.
Indeed. Good morning.
When you look at the economy, what's changed since the last time you decided to raise interest rates?
Well, for the economy, it's only been, a few weeks. So clearly what's changed is the oil market and that is moving quite a bit in the weeks since we've made our decision. And so let's see how that percolates across the economy. So what we have seen is in terms of confidence indices, there has been some improvement, but not a return to the pre-war levels. So it's not the case that there's been this very rapid rethinking of how investors and consumers feel. I mean, I think probably they need to see this current peace agreement convert into something more durable. And as you know, every day there's plus and minus signals. And that needs to settle down, I think, before consumers and investors take a more decisive revision of their views.
I mean, this is really the concern, right, is that we're not really sure what these ongoing talks will bring. Madame Lagarde yesterday was really talking about no forward guidance, but scenarios. So with these ongoing talks, are we closer to the milder scenario or base scenario?
So I think the most important fact that we see is right now the oil prices reverted to pre-war levels. But the view of the market in terms of 2027 and 2028 is that it will be well above pre-war levels. So in other words, over the next couple of years, maybe because around the world energy firms, governments will want to rebuild inventory, that maybe demand for oil for restocking purposes will keep the oil price high compared to the pre-war level. So from our point of view, it's very welcome that we see this decline in the price of oil, but in terms of the overall inflation impulse, the fact that we do have maybe for a couple of years oil prices above the pre-war level, that essentially is a cost increasing impulse to the economy.
So it's very clear that the ECB wants everyone to know that the last hike was not an insurance hike. Will the next hike be an insurance hike?
So I think it's important that we are clear on our terminology, if you like. So as President Lagarde said last night, we feel that the June decision was a robust decision, that we looked at it from every angle, and even from the angle which we did anticipate of having, if you like, this more rapid decline in oil prices. Even under that kind of more rapid normalization, it made sense because of 4 months of high oil prices to raise the rate from 2 to 2.25. What I think it's important to say is as we go forward, as we evaluate the kind of pros and cons of different rate decisions, we will be, if you like, mainstreaming the concept of how does this decision look like under uncertainty. Now, for me, I would reserve the phrase insurance hike to a situation where there's a tiebreaker, that maybe you could stay where you are, maybe you could hike, and the risk considerations will push you in one direction. But that was not the June decision. That was a clear decision, robust across a wide range of scenarios.
Yeah, I mean, given the wide range of scenarios and the uncertainty and the second round effects, is it better to hike in July or September?
Well, again, the way you phrase that question is maybe overly narrow. So what I would say is, before we get to the second round, I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty. And it's essentially the tension between these many firms have been absorbing higher cost increases for a number of months. Whether they can recover those cost increases by raising prices, or whether, especially in the context of now the fuel prices reversing, it's absorbed in profit margins and there's less by way of the indirect effect. And only after that can you start to have a vision of how strong the second round effects on wages might be. Would it be later this year and into next year? So
you're telling me my question is too narrow because you could not hike at all?
I think, as you very well know, we're very much committed to basically going one meeting at a time, to not boxing ourselves in by kind of speculating about rate decisions, and essentially focusing on, at the time of the meeting, when we look at everything, what makes sense.
Do you have a preferred inflation gauge?
So, I mean, in the end, of course, we need to focus on headline inflation in the medium term. So in order to get to 2% headline inflation medium term, indeed, we try to emphasize this framing of underlying inflation. So what is underlying inflation? It's basically the measures which probably give us a guidance about where inflation might be a year from now. Some of those measures, like I know also in the US debate, can be exclusion type measures like trimming the inflation data. But we also quite like, and indeed the best performing measures are essentially filter measures, which kind of try to use our kind of econometrics to look at the underlying common factor. So President Lagarde last night highlighted what's called the PCCI, the permanent common component of inflation, which has moved up a little bit because of the high energy prices. And essentially, we look at a whole battery of these measures. But this phrase, underlying inflation, that's really the guide.
How do you see AI actually filtering through inflation expectations and productivity?
Right. So this is one of the big topics we're going to talk about the next day or two here at Sintra. We are seeing AI take up more and more in the European economy. Our firm surveys, our consumer surveys do see quite rapid adoption compared to previous, general purpose technologies. Now, of course, that is global, but Europe is in many ways well placed to adopt AI. So I'm optimistic. We do think it's a positive factor for productivity, for investment, but it's still early days.
Philip Lane, thank you so much for joining us today. That was, of course, the Chief Economist and member of the Executive Board of the ECB. With that, Tom, I'm going to send it back to you in London. And of course, we'll have plenty more from Sintra, Portugal.
Okay, really important conversation. Francine Lacroix on the ground for us, of course, in Portugal. Lots more guests coming up, of course, with Fran through the next few hours. And there's a lot more we're going to be updating you on as well in terms of the news flow above and beyond Sintra.
A robust hike is how you described it. Didn't seem to want to be drawn on September. Anyway, let's talk about what else you need to know this Tuesday morning. Maersk has upgraded its profit outlook for the year, helped by solid demand out of Asia. This as US retailers rush to beat President Trump's new tariffs, which are due to kick in over the next few weeks. The world's second biggest container carrier now sees global container volumes growing by around 4% this year, above its previous forecast range. China's factory and non-manufacturing activity fared better than expected in June. The official manufacturing purchasing managers index climbed 250.3 after slipping in May 250. Figures point to a rebound in economic momentum, but it may be coming too late to avoid a slowdown this quarter. And the European Union and China have set an October deadline to make progress on trade disputes as Brussels pushes to address its widening trade deficit and Chinese export controls. It follows a meeting between China's Commerce Minister and the EU Trade Chief. Mario Sefcovic says Europe remains open for business while defending fair competition.
Today's discussions were intensive, focused and constructive. My objective from the outset has been clear, to begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
Okay, so that conversation, setting themselves, the Chinese and the Europeans, a deadline of October to move this forward. But clearly, with the trade deficit as acute as it now is, this is a key concern. The Europeans saying, Sefcovic saying this trend is not sustainable in terms of the trade deficit with China. The status quo is not an option. The question is, how do they respond?
Yeah, and pressure from Europe to China, one assumes, being applied around the domestic demand story in China. We had data out just overnight, didn't we?
Yeah.
Which, yes, the export machine continues, but the domestic demand story is still the area of weakness from a global, from somebody from the outside of China looking in. That seems to be the area that should be focused on. It's
a massive imbalance. Trump has decided he wants to solve this via tariffs. How does the European Union deal with it? Doesn't look like it's going to go down the same route, but ultimately you do need to find a way. These things have a way of resolving themselves eventually, usually violently. You don't want to get to that point.
Let's see if they make progress. I mean, this has been a years-long debate, hasn't it, in terms of the imbalances seen in the domestic economy of China and the global ramifications of that. We're going to turn our attention to the UK after the break because the country is about to unveil its long-delayed plan to transform its ageing military using drones and AI. We'll get the details. That's next. This is Bloomberg.
Morning, how you doing? 30 minutes to go until we start trading here in Europe. Looks like it's going to be a fairly positive session. We've seen certainly a very choppy session out in Asia. Market feels very whippy. Remember, coming into quarter end, which is another factor. Funding costs remain very, very elevated for equities. Momentum struggling as the market gets whipped around. And this morning, we're going to see more of that as well. The Euro Stoxx 50 up by 0.6%.
Yes, indeed. Let's move on to the bond market story then, where we don't see quite so much activity. We do see some buying of bonds across the European space. I can see certainly at the 10-year tenor. Where we do see some activity, though, Tom, is over in Japan, where we see yields are higher. At the 10-year horizon, only 3 basis points, but out to 20-year and 30-year, you're up by 10 basis points on the Japanese bond market. And that seems to be something worth keeping an eye on, given what's going on with the yen.
It ties in exactly to the FX story, doesn't it, in Japan at 162 right now. The yen has hit its lowest level against the dollar in 40 years. 40 years, a milestone that will generate unease in Japan and put traders on high alert for authorities wading into the market. For more, let's turn to today's markets in 3 minutes on the opening trade with Paul Dobson, standing by, Bloomberg's executive editor for Asia markets. Paul, what's going on? How much concern is there? Does Japan intervene again?
Yeah, hi, good morning, Tom. It's an impressive length of time, isn't it? 1986, the last time that we were this weak for the yen against the US dollar. You're probably too young to remember Crocodile Dundee, Tom, Top Gun, Ferris Bueller's Day Off. Those sorts of films were knocking around then. It's a different time to where we are now, but the yen is resetting at those levels. And it's interesting to see whether this is going to be a concern for the authorities or not. Yes, we've passed that milestone, but actually we're not that much weaker today than we were yesterday. I think what you've heard from the Japanese authorities in terms of the scale of rhetoric they're using, they're talking about they're willing to intervene in appropriate amounts, not red alert yet. You know, if they were talking about bold or emphatic intervention or telling you to keep your phones on, which they did last time, then we'd be more worried. But at the same time, you know, it's sort of good for the economy from the exporters' point of view, bad, of course, for importers, bad when you've got high energy prices as well. And so those are the sorts of decisions that Japanese lawmakers need to juggle and balance when they're deciding whether to intervene or to allow the currency to keep on going.
Memories of 1986. Thanks for that. Let us talk about what's going on more broadly then with the yen, because is it just the yen that's weakening? Is it actually a dollar strength story? What impact is this having on other currencies in Asia then?
You're absolutely right, Anna. I think since we had the pivot from Kevin Warsh to a slightly more hawkish stance of the Fed, that's definitely added pressure to Asian currencies because it's been supporting the dollar. It's been lifting US yields relative to Asian yields, which are very low, and that draws cash towards the US. So we've also seen, like you said, the Korean won under pressure, for example. That's got an extra dimension, which is quite interesting because the equity market there is rallying so hard. Funds that own those companies are seeing the weight of the holdings within their portfolios hitting up against their buffers and forcing them to sell. So we've got overseas funds selling out of South Korea, and that's been adding to pressure on the won over recent days and weeks, as well as that turn of the Fed. OK, Asia's had a pretty good quarter. Paul, what are people saying about what comes next? Can the momentum continue? Yeah, it's the best question, Guy. There will be volatility. I think we can say that with a lot of certainty. You know, you see the Kospi bouncing up and down more than 5% intraday all the time now. Very large swings, but there's still a lot of confidence and belief in the growth story. You know, we've seen that they've announced their very large investment plans this week. That tells you that they're confident they can continue to deliver growth. It tells you that there's a strong amount of belief in the AI story. So it's the best quarter as for the Nikkei for Japan on record, the best quarter in Korea since 1998, and there's still plenty of sell-side analysts telling you that continue buying. I think JP Morgan has a particularly bullish forecast looking for further gains throughout this year.
Paul, thank you very much. Paul Dobson, Bloomberg's executive editor for Asia markets, diving into some of the Asia themes. And I noticed that the Korean won up by just 1% today, which doesn't seem to stand out as any kind of move based on very recent history.
Well, the Korean won's been the Korean won has oddly been.
That was the Kospi, sorry, I was referencing. Yeah.
Yeah, sorry, the Cosby. Different story. OK, let's talk about what we're seeing in the UK. The UK will seek to upgrade its ageing military kit by investing in drones and AI, alongside more traditional deterrents such as next-gen fighter jets and nuclear weapons. The plans are being laid out today by the current Prime Minister, Keir Starmer, after months of delay and a funding round that led to the resignation of his Defence Secretary. Lizzie Burden is here with more. How different is this announcement going to be than the one that we were anticipating?
Well, of course, that's the one that John Healey resigned over, and yet £1.5 billion more funding has been added since Healey quit, but we don't know whether that's actually new money or if it's just clever accounting. The big number in this is the £5 billion that's going to be spent on drones, and the new Defence Secretary Dan Jarvis is saying that that's what you need in modern warfare. But then look at what's not getting spent here. What's been ditched is, as you say, the plan for a Type 83 destroyer, the purchase of new jets to carry new nuclear weapons delayed, and then programmes to recruit new cadets and improve military housing have been decelerated. So you have to look into the detail of this. And also, what's odd is the idea that this has been pushed through by Keir Starmer before the NATO summit.
Yes.
It's Andy Burnham who's likely to inherit it, and he hasn't had a say about it.
Did he have a look at it? Was he involved at all? Did he get a sign off? I mean, we're still working through the speech that he made yesterday.
We are, yeah.
And so if we think about it in the context of what is on his in kind of his plate, essentially, what's top of the list for him in terms of priorities? Maybe defence is there. He didn't talk about it in any detail yesterday. What's the reaction been to that speech? And what for you were the takeaways?
Yeah, defence was not the focus. Devolution was the focus, and he did this speech up in Manchester. So talking about giving more fiscal power to the regions, also talking about building more council houses, the biggest programme for that in the post-war period, easing the cost of living when that's possible. But we've heard all of this before, haven't we, from previous prime ministers, levelling up Britain, all sorts of promises that have never fully been fulfilled. So we need to wait for how it'll be implemented. And even though this was billed as the biggest economic speech, the biggest speech to set out his economic agenda, we didn't find out who his chancellor is going to be. So a lot of frustration, actually. But I would say, just from some really great analysis that we got from Bloomberg Economics, there is a case to try and even out regional inequality in the UK. They point out that the UK is the most fiscally centralised in the G7. They're just worried. They say the main risk is that while Burnham's here talking about a 10-year mission, what have we learned from recent history? Prime ministers end up getting sucked into a shorter cycle and then having to look at more expensive giveaways in the short term.
So he hopes that number 10 in the north will do something different to the other plans. We got a hint as to the idea of not holding another election, didn't we?
Yeah, we did.
You didn't have to look too hard for it either.
Yeah, so he was talking about how Labour's 2024 manifesto is consistent with all that he outlined yesterday. I agree. I took that as a hint that a general election isn't coming. You could argue, who wants a general election at this point? Do the Conservatives really want it? Kemi Badenoch was speaking yesterday ahead of Burnham's speech. She said she's up for the fight, but really, does Burnham want it? Does Badenoch want it?
The problem, I think, with yesterday was he wants to cool London down. Hey, apparently London's overheating. It's not aside from the weather. There doesn't appear to be.
It was really overheating last week.
Yes, precisely. There doesn't appear to be that much kind of evidence for that.
Well, he was saying though this is about devolving power everywhere, including London, and you're wondering whether So that's a message to the mayor of London: maybe get more powers rather than.
But he still wants to cool it down. Here is a part of the economy that is functioning. Which bits? The danger here is that you slow down the bits that are working. And you get a sort of duration mismatch where you don't get the bits that need to fire kind of picking up.
That was always the argument against levelling up, that you would get levelling down. But I'd agree with Anna, that was not the point that he was making, that you would also give more power to London so that it can be in charge of its own growth.
Why did he say he wants to cool down London, then?
I think it's about tackling regional inequality, Guy.
OK, fine.
Okay. Lizzie Burden, thank you very much indeed with the details there. The analysis, of course, coming through on the back of that speech from Burnham. And as we look ahead to the announcement of the Strategic Defence Review, finally. Meanwhile, in the defence space, European manufacturers are moving ahead with expansion plans amid unprecedented interest in their weapons.
A really steep demand for our missiles. And that has made us being aware of this, so that we have built up capacity both in Europe, also factories in the US and Australia is under construction. So we are actually able to secure that we are able to deliver on the demand we see now in our order backlog, but also looking into the prospects going forward in the next few years.
That was Eirik Lie, President and CEO of Norwegian defence firm Kongsberg, speaking to Bloomberg from Brussels. There's a lot more coming up. Stay with us. This is Bloomberg.
Welcome back, everybody. This is the opening trade. It's Tuesday morning, 7:44. The futures picture looks like this, pretty flat for London. Elsewhere, though, in particular the Xetra DAX, we are seeing some positivity coming through, so expect that tech theme perhaps to be to the fore. Nasdaq futures, interestingly, up by 0.2%. We're focused on Sintra. We're focused on the inflation fight that has been in the month of June. Over at the ECB.
We're going to get French data very, very shortly. I thought Philip Lane was fascinating. Yeah. He talked about it being a robust hike. That's the hike that we've just seen. He would not, though, be drawn on whether or not we get another hike in September. The market's pricing 64% as the latest kind of chance of that happening. So is he pushing it beyond that before we can see the second round effects?
He said one clear focus for him was indirect effects, and he was looking at food inflation, services inflation. He says that channel is where there is the most uncertainty, which was interesting.
I took away another acronym, PCCI, persistent and common component of inflation. There you go, that's now on my to-do list, something to put on the radar.
French inflation data hits our screens. Month on month comes through at negative 0.3. That is down sharply and well below forecast. That takes the year-on-year number to 2%, bang in line with where I suspect the ECB would like it to be, down from 2.8, for a sharp slowdown in the French inflation data. And if you look at the PPI numbers, also, maybe some stabilisation in the PPI numbers, but a sharp slowdown, certainly, in the data that we are getting out of France. Remember, we get more data today, and then we get the complete number that is going to be coming through tomorrow. This, of course, will be, in some ways, music to the ears, you could argue, of some of those ECB central bankers that are gathering in Sintra, Portugal, for the meeting that is taking place there. Let's carry on our conversation and throw it back to Francine Lacroix, who is there.
Thank you so much, Guy. Well, joining us now is Olaf Slijpen, Governor of the Dutch Central Bank and, of course, Governing Council member at the European Central Bank. So, Governor, thanks so much for joining us, and congratulations. I think tomorrow is, to the day, a year since you've been in top job.
Exactly. It's going to be my first anniversary. Yeah.
And there's been a bit of roller coaster, given everything that we've seen with energy shocks.
Yeah, you can say that, indeed. And I knew that when I started the job that there would be surprises along the way, and and I was right. I didn't know exactly what was going to happen, but unfortunately we are living in a world that's characterized by quite a few shocks.
Indeed. How do you see inflation developing from now? So we have a memorandum of understanding between Iran and the US, but unclear how much the ceasefire holds, and so what happens to oil prices? Yeah,
I mean, it's first of all, of course, it is good that there is a memorandum of understanding, and I truly hope that it will lead to a structural agreement between the two countries. Indeed, as a reaction to that, oil prices came down quite a lot. At the same time, we also have to acknowledge that there's still a lot of uncertainty around there. So let's see how it will develop. Obviously, energy prices coming down will have an impact on prices. At the same time, we see that the previous rise in oil prices already has its impact on the price level.
So how worried are you about second round effects? That without, even if oil prices go down, that these second round effects are here for longer?
We have to see. You know that we always say we are data dependent. We have our next Governing Council meeting end of July. Then we will have new data again. We will look at how the situation looks like. Decline in the oil prices now, of course, is from an inflation point of view definitely good news. But it remains to be seen what is still in the pipeline.
Is there a case actually for a hike in July?
I would like to refer to President Lagarde's speech that she gave here in Sintra last night, where she said we're not into forward guidance, but we are into framework guidance, which means that it's important that the markets, the analysts, the people understand our reaction function. And I think markets understand the ECB's reaction function pretty well. So we look at inflation outlook, underlying inflation, and the strength of the monetary policy transmission process. And I think that's the best guidance I can give. And if people understand our framework, then I think they will also understand what we are doing.
But given the uncertainty in geopolitics, is there a case of saying, look, even if second round effects of inflation goes a little bit higher, it's just better to wait and see what happens in September for a hike?
We will see. We will see how the data looks like, and then we will take the right decision.
When you look at the economy right now, where are the main forces that you see on growth, but also jobs data?
Yeah, I think one of the things that we are seeing, and that we have been seeing a lot actually last couple of years, being confronted with these kind of shocks, is that the economy is pretty resilient. So we can weather storms. We are pretty flexible. I think another positive thing is that if you look at the situation of in particular the banks, they have buffers, they're much better shape than they were a couple of years ago, and the financial sector actually is supposed to absorb shocks, and that's what the financial sector did. Having said that, I mean, if you look at growth numbers, in particular in Europe overall, and structural growth, it's pretty low. It's not very impressive. We have to do something about it, but this is not a monetary policy job. This is a job for policymakers, for politicians.
But Governor, when can you see that hike in June? When can you see the real effects on the economy?
Yeah, as I said, in the end, it's not like one number or one little thing or big thing you're looking at. We have to look at the bigger picture. As I said, we will always look at what's going to be the outlook for inflation, what are the underlying inflation dynamics, what do we see developing there, and are our actions doing what they're supposed to do, so the monetary policy transmission process. That's really how we look at it, and on that basis we will take a decision.
The market is expecting one other hike this year. Are they right?
Some people say the market is always right. Some people say the market is always wrong. As I said before, the most important thing is that we are able to convey our reaction function, and we are not following the market, but we also don't want to surprise the market. And I think from that point of view, we are. And one shouldn't be too complacent, but I think we're doing a good job.
When you look at energy prices, where do you see, is there a part of the economy that you take particular attention to? Is there an inflation gauge or an inflation number that you watch more than others?
It's not one particular number that we watch, let's say, more than others. But of course, what is always interesting in this point of view is services inflation. In my own country, the Netherlands, we saw services inflation going up. There apparently is a link with jet fuel, for instance, and traveling. And of course, so far, so good. But of course, and then we are talking about second round effects. We haven't really seen them yet, but wage developments is a very important factor to look at. We know that wages are lagging. And so let's see when the first trade unions will come with their demands, what they will be. So that's another thing that, at least personally, I will definitely be looking at.
Is AI undoubtedly inflationary in the short term?
Yeah, I think the jury is still out, but I think one can say that at least in the short term, AI is inflationary because of there's a lot of spending going into it, which is supporting the economy, and we see that in investments. It's probably also boosting consumer confidence to some extent, or at least avoiding it from going much lower. But of course, the productivity gains are not there yet, and the idea is that when those materialize, that indeed would be disinflationary. So let's see. But at the moment, I would say what we're seeing and the huge investments going in there, they support the economy, but indeed they are somewhat inflationary.
Governor, thank you so much for your time today.
You're welcome.
That was
Pleasure.
Olaf Sijpen, the governor of the Dutch Central Bank and ECB Governing Council member. With that, Anna, I'm going to send it back to you in London, and we'll have plenty more throughout the day here in Sintra.
Francine, thank you. Bloomberg's Francine Lacroix, of course, live at Sintra. And coverage from Sintra continues. We'll be bringing you a conversation with the Belgian Central Bank Governor, Pierre Wunsch, also speaking to Francine. That's at 8:15 a.m. That's London time, so 9:15 if you're actually in Sintra. We have European equity markets then looking a little bit positive. US futures looking a little bit positive right now. So we are expecting a little tick upwards at the start of trade. A few individual names to keep in focus. Maersk, some new guidance coming through there. Abivax, some real positives around one of their test results, and Sainsbury's also could be in focus. We had some news out of that particular grocery business. So those three stocks could be ones to watch.
So, some interesting individual corporate names. We're going to watch the energy story again. Oil prices are down. Gold, interestingly, has just picked up 0.3%. It had crossed below 4,000, so watching the miners as well on that. Dollar strength is clearly a factor there for the yellow metal.
The gold's been getting crushed recently, which is fascinating to watch in terms of that whole saga that we went through in terms of...
Was it all Fed expectations then? And is that seems to be what's shifted, hasn't it, with that hawkish commentary from the Fed. We'll be back with the opening trade. Futures are pointing then a touch higher, certainly more than a touch higher over in Germany. This is Bloomberg.
OK, here we go. A couple of minutes to go until the opening trade this Tuesday morning. Europe looks like it's going to have a fairly good day. Part of that is down to what we see here. We went out here, we finished up there over in the United States. Very choppy session out in Asia. And remember, of course, we're coming into quarter end, Tom.
The tech story was back for the US and it's been back for Asia as well. So the hyperscalers performing very well yesterday. So we'll see if there's a read across, because it was flat yesterday, to your point, across the European stock story. But ASML performed very well and some of the other tech names as well. Right now, futures pointing up by 0.6%. You're looking at a pretty strong session over in Germany. The DAX looking to add 162 points. The FTSE 100 looking a little flat. Energy is a story there, as is miners as well. But generally, across the board, you're looking at gains of around 0.6% potentially. Anna.
Yeah, let's have a quick look at some of the stocks that are in focus this morning. And I also, thanks to Guy for correcting me, I correct the fact that I said that Sintra is an hour ahead of us. Of course, it is not. Portugal is on the same time zone as London. That important business over. Let's have a look at these individual names that we are watching. Maersk is certainly in focus because this is a business that has been out with some new guidance for the market. So we'll keep that one in focus. Abivax is also of interest. This in the pharmaceuticals space. Abivax shares, they could be higher as a result of positive results from obefazimod and some of the testing around that one. And Sainsbury's is also a key area of focus. The overall numbers, were they a little bit lackluster? But is there something else to be said about the retail performance of the business? Those two dynamics I have seen mentioned by various houses this morning. So we'll keep those in mind then. Guy.
OK, here we go. Last session of the quarter. Let's take a look at what it's going to bring for Europe. We're expecting a positive performance out of the gate first thing this morning for Europe. Decent session out in Asia, very whippy. Decent session yesterday in the United States. OK, here we go. Let's get the Tuesday session underway. This is what we are looking at. A positive performance is expected from the get-go. London is in the green, not expected to actually be the kind of the heavy lifter of today's session, but it is up by, let's call it 0.1%. We're approaching maybe 0.2%. I'm being generous here. The Stock 600 is up by 0.3%. We are expecting European markets to do a little bit better today as we come in to the end of the quarter, but by no means have they been outperformers over the last quarter. Does that give us maybe a little bit of a better look forward when it comes to what could come next? OK, that's the picture at the moment. The AEX is up by 0.6%. It is the outperformer. Elsewhere, reasonably muted, but the Stock 600 up 0.4%, Tom.
The tech sector was amongst the best performing yesterday, the top performing sector yesterday across an otherwise flat story. Right now, tech is near the top again. So that sector performing relatively well, up 1.3%. The gains coming through for basic resources, currently up 2%. So that sector is currently top of the list. Majority of sectors, bar 4, are in positive territory so far in the opening few seconds, of course. So 4 sectors in negative territory. The biggest losses coming through for consumer products right now, down 0.7%, Anna.
Yeah, that move in basic resource stocks is quite out there, isn't it? I mean, the copper price is up 1%, but nothing else is standing out as particularly extraordinary. Aluminium actually up by 0.8%, but yeah, we're seeing some quite substantial moves on basic resources. I suppose we have seen quite a lot of volatility in gold and in silver of late, and gold is back above the 4,000 mark, I noticed this morning, but so certainly keeping those in mind. But most sectors are in positive territory then. In terms of the individual movers, SAP is an interesting one. We're going to talk about software as a service a little bit later on in the programme. The other side of that tech story, though, ASML moving to the upside, up 3.5% as we continue our focus on tech this morning.
That's a lot of points.
So that's a 5% move for ASML over the last 2 days. I mean, if this holds.
So at the moment, the stock 600 is up by 3 points. A third of that is coming out of ASML. So the chip story is definitely back on the front foot this morning. Schneider's up quite nicely. Nokia's up. ASIA Brown Boveri's up. So there's a theme running through this market in terms of the AI build-out story that looks pretty strong.
So that's the story around technology this morning, and that is leading to some outperformance for some of the markets like the AEX, for example. Possibly the DAX too, but it's not open yet, but we will keep an eye on it. Let's speak to Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments, on set with us this Tuesday morning. Fabiana, good morning to you. So you've been saying recently that you think these are the most complex markets that we've seen in a while, and you characterise them as different assets being driven by different drivers. Where does that leave you? What does that leave you assuming as we head into the second half of the year? Can't believe we're quite there, but the second half of 2026 looms.
Yes, time has gone fast, hasn't it? So what you're seeing in markets right now is a very narrow trade on AI stocks in equities. You're seeing a trade on inflation or lack thereof on the bond side, and you're also seeing very erratic moves in stocks. I mean, we were just talking about it earlier. You're seeing stocks going up or down by, percentage points within 1 or 2 days. So this is not an easy market for investors to invest in. And I'm also very concerned about the amount of leverage in this market. Those erratic moves are most likely driven by either quant strategies that are driven by news flow or retail investors are becoming a bigger part of this market and very levered.
Yes, and is that concern around retail investor participation or leveraged retail investor participation? Is that specifically that thought triggered by what's going on in South Korea right now, or is this a global theme that you're concerned about?
I think it's a more global theme, but it's clearly concentrated in markets where there is if you want, a deeper culture of retail investment in equity markets. So in the U.S. now, about 20% of the volume, or 21% of the volume of equity markets are retail investors. Interestingly, 28% of the option volume are retail investors. So you see what their exposures are. And also in Korea, you know that many retail investors are actually exposed to the market through levered strategies. And that is creating significant erratic behavior in the stocks.
You have a modest underweight on equities then, Fabiana. Good morning. What changes and what gives you a more constructive view? What do you want to see that would change you and change that view to a more constructive view on equities, a more positive view?
So actually, we've been always very balanced between equities and duration and fixed income. And just recently, we have taken some profit out of markets such as Korea because we felt that it was very exuberant in its behavior. Do we still think there is value in equity markets? Absolutely, yes. Is the value everywhere? No. I mean, there is a whole host of stocks which are the AI losers, the stocks that have been forgotten by the AI trade, that I still think are very worthwhile investing in.
Does that take you to software stocks?
It does take me to software stocks. You know, the SaaS-Mageddon, the belief that all software stocks will be replaced by AI, that, in our opinion, is not true. Some of them host data of clients. Clients are not going to go to an LLM to host precious client data or other type of data. But it also takes me to other areas of the markets. It takes me to those companies that are utilizing AI in different sectors. And I've heard some interviews that you have had with CEOs where they were actually pointing out to the productivity gains that they were getting from the AI implementation.
If the Fed raises rates, does the equity market come down?
Well, not for just one raise, and it depends also why that raise is happening. Okay. If you think about the higher for longer than we had a couple of years ago, equity markets were completely fine because they were still driven by other thematics.
So we get nominal growth. That's high.
Nominal
Fed
growth
can raise
is
rates
high.
In that kind of environment.
Yes.
Labour market looks good.
What can slow some areas of equity markets is a slowdown in demand if we continue to have elevated energy prices. I know now the trade on energy prices is to the lower side, but probably there is some speculation on the news flow around the Middle Eastern conflict. But you would expect more investment in rebuilding the pipelines and rebuilding the facilities, and that could bring higher energy prices. If that's the case, then you might have some impact on some areas of demand.
A few months ago, this conversation would have started with gold. Need to have gold in my portfolio. If I've still got gold in my portfolio, what am I doing with it?
Well, I still believe in the structural story of gold. We talked about it in the past where we said, again, there's a lot of exuberance. There was a lot of exuberance in that gold trade. Some of it was retail driven, and then the more structural side was driven by central banks. So that exuberance had to come out of the gold trade. Structurally, gold is still an alternative to dollar for many central banks. And so I would see that part of the structural trade continue.
Fabiano, if we find these markets complex then, but we're looking for themes that we understand, are you thinking about investment themes right now? I mean, low carbon energy sovereignty, those kinds of things, are they drivers that you can get behind?
Absolutely, follow the money. So there is going to be still significant capital expenditure in areas such as infrastructure, in areas such as energy independence and security. Think about Europe, think about Asia, what we've all learned from the conflict in the Middle East, and then innovation. Innovation applied to not only technology, but healthcare and frankly, any other sector.
Fabiano, you sat down during the break with us and you said, I'm worried about AI and jobs. What part of that story are you concerned about?
I'm worried about the news on cutting entry-level jobs. I think that is short-sighted. I mean, if you're cutting entry-level jobs, you're cutting the possibility of having senior-level jobs in the future. The senior-level jobs that are going to drive your strategy, that eventually in the future will embed AI in your operations.
So would you want to avoid companies where you see that happening?
When I see that happening indiscriminately, where I see that happening at the entry level, then yes, I would reconsider that and speak with management.
Do you think there'll be shareholder pressure on those businesses to not do that? Because I suppose there might be some shareholders who like the look of that because it might flatter margins in the short term.
I hope there will be some questioning. I mean, some jobs will be replaced by AI. We know that. But cutting entry-level jobs just because it's easy, I think that's a dangerous road.
I'm going to leave that thought for another day. I'm going to come back to it. Fabiana, thank you very much indeed. Fabiana Fazeli, CIO Equities, Multi-Asset and Sustainability at M&G Investments. The Core 6 looks like this. You're certainly seeing a pickup in ASML today. It is pushing overall markets higher. When ASML goes up by 3%, it has a big points effect into the stock 600. But defence stocks are higher as well. Let's get the latest on what we need to know. Chloe Melly here in the grocery aisle.
Good morning, Guy. Indeed, we are up for Sainsbury's. We're up a little bit stronger earlier, but now it's pared some of those gains and we're up about 1%. And so we had earnings, we had a trading update from Sainsbury's and the sales actually came in slightly below expectations. But what was reassuring for investors is that guidance was actually confirmed, even though that was quite a wide range. There were some potential concerns that the impact of the Iran war on shoppers might really affect that guidance. But it seems that Sainsbury's is holding firm. And so this is quite reassuring showing quite encouraging from investors' perspectives. And so we are up in the green this morning. We are also in the green across tech stocks, AI-related stocks here in Europe. We had a Wall Street rally in the technology stock that spilled over into Asia. Now we can now see that spilling over as well into Europe. And we are seeing quite strong moves actually there, especially Siemens Energies that provides those gas turbines that are then used in data centers. And then, of course, in the chip making sector, we've got ASML, BE Semi and ST Micro up all in the green here this morning. We're also in the green for Genmab, which is a biotech company and has had some positive trial results with its partner AbbVie, and that was a drug that is used for lymphoma. And so we're up very strongly there, about 5%. And finally, Maersk is also in focus today and is also up in the green, about 1.5% after it raised its outlook. There seems to be very strong demand for that container shipping market, especially from Asia. And so we're up about 1.5% there for Maersk this morning on the back of that outlook boost.
Chloe, thank you on some of the stocks on the move this morning. Chloe Melee with that update. Coming up, we are heading back to the ECB's annual forum to hear from the Belgian Central Bank Governor, Pierre Wunsch. That interview is next. This is Bloomberg.
Welcome back. It is Tuesday, 8:15 here in London, 8:15 also in Sintra, same time zone. European equity markets up by 0.5% right now on the Stoxx 600. The FTSE is underperforming. The DAX outperforms. Abivax is also in focus for us. Let us just have a quick mention of this French pharmaceutical company. Shares up by 25% right now. They were up 28%. They've had some positive results on their obefazimod. This is a treatment that they have been working on for a while. I won't read what it treats because it gets complicated, but there we are. Positive news, up by 22% on that one.
OK, what kind of medicine does the European economy need right now, the Eurozone economy? Does it need more rate hikes? We've just seen French data coming in, inflation data signalling actually a significant slowdown. So let's get back to Sintra in Portugal and Francine Lacroix.
Guy, good morning. That's $1 million question. Does the Eurozone need another hike? I'm delighted to be joined by the Belgian Central Bank Governor and ECB Governing Council member, Pierre Wunsch. Governor, thank you for joining Bloomberg early in the morning to talk interest rates and inflation. So does the Eurozone actually need another hike?
Maybe, maybe not. I mean, if you would have asked me after our June meeting, I would have said, if this conflict goes on, and oil prices stay at a high level, I probably would have told you, I believe we need another one. The market is still pricing one. But the way I would put it is, the origin of the shock being higher oil prices, to the extent you believe that there is now a truce and the prices will go down. So the origin of the shock has disappeared, more or less, before we see second-run effects. There will be some. So that makes it, I think, relatively easy. We might need another hike, but in all likelihood, and that's of course what the market is pricing, but not as much as we thought in June.
But so if the Eurozone does need another hike, is it easier or better to do it, quicker, so July rather than September?
I would rather, if we believe we need another one, move quickly. It doesn't mean July, but there is always value to it because you have more information. But if we believe that now it's going to be, less pressure in the economy because oil prices go down, if you wait too long and then you have one surprise in one direction, one surprise in another one, you end up doing a hike, and then maybe you have three surprises on the downside. Now we know inflation is going to be above target for a number of quarters. So if we need to do another hike, if the data show that it's required, then I would not wait for too long, but I'm not committing to any specific date.
Governor, do you think that the ECB needs to see almost like a hike fully priced in to act?
If we are aligned, and the thing is, I think for the last few meetings the market was aligned to us, or we were aligned to with the markets, but I didn't hear colleagues saying, hey, where is the market going? So when you are in those circumstances, indeed, it makes it easier. In a way, you have always this trade-off. Do I wait for more information? Now, if the market is moving in a direction you're not comfortable with, the cost of waiting is maybe higher. If the market is moving in a direction which you feel is making sense, then of course it makes it easier to wait for more information. That's the way I would frame the discussion.
What's your most important data point that you're looking at? I know, of course, it's headline inflation, but given it's different if you're looking at Spain or France.
It's very difficult just to point at one data. I mean, over the medium term, I guess. We care a lot about wages, of course, because at the end of the day, that's really the one variable that is going to drive a lot of things. But you cannot look at only one variable in isolation. And actually, what we've been doing over the last few years is adding more data, because we have realized that our models have been calibrated. Maybe for another type of environment. Now we have more supply side shocks. So we've added many more data points outside the model, or to just inform the models. Sometimes the problem is then that you have so much information, you would want to have a heat map, maybe telling you, okay, this data moving in that direction, it's above or below what you had in the model. So you're starting to have those kinds of discussions. So over the medium-term wages, and that's one reason why I believe we should be going in the right direction. The developments on that front are really benign.
Governor, when are you expecting actually the impact of the June hike to have an impact on business and the economy?
Well, we know it unfolds over a relatively long period of time, over 1 year before it completely unfolds. We have estimates for that, but there are worse what there are worse. I mean, the impact is already starting today, or was started, and actually in a way started before our decision June meeting, because the market curves had already moved, not over very short-term durations, but for 3 months and more horizon, it had already moved.
Is there a case for the next hike to be an insurance hike that Madame Lagarde was pushing back against for what happened in June?
Yeah, the way we qualify those, the way I look at it, we are having to take decisions under uncertainty. So insurance hike, what does it mean? I mean, sometimes you need, if you're not comfortable with where the market is going and you feel you need to do something, it's dependent on where you believe the world is going, and there are. I mean, the fact that a hike would be robust under all scenarios was the case this time, but we might have situations where we have to hike, and we know that if the world's move in another direction, it might be a hike too much or too little. So yes, it's a world that we have to deal with. It's an uncertain world.
And Governor, I understand, of course, your job is to look at the Eurozone and therefore its energy, but we're in this world where there's a lot of different forces from around the world. You have China, you have the competition with the US, we have Kevin Warsh for the first time here. How much will a change in Fed policy impact your thinking on the Eurozone?
Oh, well, first, we don't comment on neighbor, others' monetary policy, but it's also too early to even. I mean, the answer I typically give is what we see in the market, one way or another is going to impact how we interpret or even how we conduct our projections, and that's the way we look at it.
So what do you see in the European economy right now that you could be worried about? Is there anything?
I mean, I'm more, in a way, is it being worried? I mean, 6 months in this world has become sort of an eternity there. We've been confronted with so many shocks. It's more like the new shock that we haven't seen coming, because essentially, I mean, if oil and gas prices are going down as priced by the market, we should be okay.
But in the longer term, you have these second round effects, which don't seem that they could be going anywhere. Or do you think they'll adjust?
I mean, on the inflation front, the second round effects, considering that oil and gas prices are going down, that wage developments are benign, we are going to have some, and that's where we're going to have to calibrate our rate path. But I'm not concerned. I mean, I think this is more than doable.
If things go the way that the market is pricing at the moment for the price of oil, and there's no hike in July, could you see the ECB not moving this year?
It's a possibility. I mean, again, I mean, if we have surprises on the downside, inflation is going down faster than we thought. If we don't see less second-round effects than we have in the projection, then in a way, by definition, we're not going to hike more. I don't really have a base case at this stage. Also because, honestly, oil and gas prices could move again. I mean, it's not like the geopolitical situation is clearly at equilibrium or fixed, or whichever way you want to present it.
How do you look at AI in terms of impact on how it changes our economies, productivity, inflation, but also growth going forward in Europe?
That's probably what we don't have in the model and in the projection. And we discuss a lot about AI, and if you read what the AI people, Amadei and others are telling you or telling us, they say the world is going to be completely different 3 years from now. We don't have that in the projection. Some people say it's going to be deflationary. Some people say it's going to be initially inflationary because you first have the investment and then the impact on productivity, which I guess is what we have today. But it seems to be moving extremely fast, and I think we're more in discovery mode. We don't have the tools to translate quickly what people say, given the uncertainty in our models and projections. So if something would happen, I don't exclude a positive surprise on growth. Of course, Europe is less positively impacted. We are not on the semiconductor part. We're not producing the models. But if these models lead to productivity gains in many sectors, at some point it will benefit our economy as well. And of course, if it adds, and that's what we have in the literature, say 0.5 percentage point to growth, it's a game changer in terms of fiscal policy, in terms of debt dynamics, in terms of the possibility to increase wages. It creates some room. And then you have the concern that on the labor front it could destroy some jobs, and that's what people are worried about.
Pierre, thank you so much for joining us today. That was, of course, the Governor of the National Bank of Belgium. With that, Guy, I'm going to send it back to you in London.
Francine, thank you very much indeed. Francine Lacroix in Portugal, covering the ECB conference. We're going to continue with that conference throughout the day. Torsten's going to be with us a little bit later on. Follows Torsten Slok. We've also got the Bank of Finland Governor. Olli Rehn is going to be there too. Got some great guests lined up coming out of Sintra.
We're still hearing all of these voices from the European Central Bank giving themselves optionality, but talking around the risks of second-round effects, and certainly the Belgian Central Bank Governor there not closing the door on another hike. And, of course, that is what's priced by the markets right now, another 25 basis points.
Is Sintra all about different versions of just being data-dependent? The Europeans have more, maybe, words to go around that with scenarios, and then the Americans in the shape of Kevin Warsh, what will he say if he doesn't want to say too much?
Well, he sit there and just say nothing. How does Warsh say nothing and still be on a panel? I'm waiting. I'm waiting to see how this one works.
How does the moderator cope with that?
Yeah, there's the panel, and then there's the being a fly on the wall at any of those conversations with his counterparts would be fascinating as they try and size him up.
Yep. Okay.
Coming up, fears. We were hearing there about one of the central bank governors talking about potentially AI if it added 0.5% to growth. That would be a game changer. Well, fears about software will be left in the dust as investors pile into the companies seen benefiting from the AI build-out. That's not necessarily the view held by everyone. We're going to speak exclusively to the CEO and co-founder of Atlassian. That's coming up. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session. A positive handover then from Asia and the US, setting the euro up for 0.6% is a gain across the benchmark. A strong session over in Germany. The DAX adding right now 220 points. Tech is playing its part as well in the European equity story today. 0.4% gain is what you're seeing over in France. The CAC currently adding 33 points. Here in the UK, a bit of a laggard by comparison. FTSE 100 up just 0.2%. Guy.
OK, let's talk about what the internals look like. 3-2 basically is the story in terms of what we're seeing up and down. I appreciate my maths is a little bit off. Volume's a little bit light, but not much. Let's talk about where we're seeing some gains this morning and where we're seeing some of the losers. Abivax is certainly a standout story. More reassuring data coming through with its new bowel treatment. The market likes what it is hearing. It is a reassuring narrative that is coming through, and the market is rewarding that with a 26% 26% gain. And we're getting quite significant volatility at the single stock level right now. The AI trade is back on. Nokia is up by 4.5%. ASML is up by 3.3%. You get ASML moving by 3%. You're going to see a big points performance coming through at the top line on the stock 600. Downside, you've got a few notes out this morning that I think are moving things around. Logitech is certainly one of those. You've got Teleperformance. I think you've got Caring as well, all on the move this morning. Let me show you those losers and show you what is happening. Logitech is down by 4.22%. We've got an unchanged run in the middle, so I'm going to move straight on to Caring, and it is down by 2.96%. Anna, what do we need to know?
Let's get an update then on some of the other stories we're following this morning, Guy. Iran is insisting that it plans to retain some sort of control over traffic through the Strait of Hormuz. It raises the stakes ahead of talks, which the US says will take place in Doha today. US Secretary of State Marco Rubio has said any tolls or fees for ships passing through the strait would be unacceptable. The yen slid to its weakest level against the dollar since 1986, a milestone that is generating unease in Japan and putting traders on high alert for authorities wading into the market. Finance Minister Satsuki Katayama says Japan will respond to developments in foreign exchange appropriately at any time. And French inflation has slowed for the first time since the Iran war broke out as energy costs have fallen. The data alleviates some pressure on the European Central Bank to keep raising interest rates as they discuss the policy outlook at their conference currently taking place, as we know, in Sintra. Tom.
OK, meanwhile, global equities are on track for their best quarter in almost 6 years, driven by optimism, of course, around the AI build-out. But when it comes to the software industry, valuations have been under severe pressure as investors worry about the sector's future. Joining us now for an exclusive conversation is Mike Cannon-Brookes, co-founder and CEO of Atlassian. Mike, great to have you on set with us. Thanks for coming in. What are investors misunderstanding about the AI impact on software as a service, on enterprise software?
Sure. Thank you. Thank you all for having me. Look, I think software companies in general are putting up great results and continuing to be so. You can see last quarter, we had north of 1.8 billion in revenue, grew over 30%, with RPO, so our long-term revenue growing at north of 40%. So as a business at scale, continuing to grow fast, I think you'd have to say that our current results over the last few quarters have been very strong. So investors presumably are looking forward and saying, but what is the long-term future of the business, right? Very biased position, but I completely disagree with the narrative. Our demand has never been higher at the moment. Having spent all week with customers here and across Europe, they're incredibly bullish on our future, and they continue to consume far more of our applications as their teams and businesses get more complicated. OK, so the earnings story is there. You're seeing that demand, and yet I'm looking at the likes of Microsoft set for potentially its worst month in since about 2000. That stock is down about 20% this month. Your stock is down about 60% in the last 12 months. Is it the economic model and the pay-for-seat model? Is it a question mark for investors about whether or not you can sustain margins? It's been software as a service has been very rich on margins historically, but that's now being challenged. How can you convince? Are the margins going to remain as robust as they have been historically? I believe so. There's obviously a concern that the cost of delivering great AI applications, the intelligence underneath, will continue to rise, so our cost of goods sold will get more complicated, margin will compress. We haven't seen that so far. We don't see that in our future. We've done a very good job of delivering amazing AI solutions to our customers. We have tens of millions of people that use our AI tools every single week, and we're still maintaining our margins where they are, and I believe it will only get better as you go forward, actually, as the... margins will expand from here? I think margins will continue to be strong. It's up to us to manage that, but we can certainly deploy a lot of great AI technologies. The cost of managing AI is changing every quarter, but I don't think that's an unmanageable problem. At the same time, you have questions about, are seat counts going to remain strong? Are businesses going to continue to grow? Again, I'm incredibly bullish that AI will actually grow the total number of white-collar workers, the creativity, the outcomes that have continued to be shown. I don't see a lot of people sitting around saying, thanks to AI, I'm only working less hours in every day. I have less need for my team, etc.
Is the market just lacking nuance at the moment? It seems we've got this kind of big bucket of software companies, and we're just kind of leaving it as a big bucket, and we're treating everything in that bucket as the same. Is that do we go through a process at every kind of major pivot point? You kind of see this happening. The market finds it difficult to target winners and losers. How long do you think that phase lasts for?
Look, I couldn't tell you how long it's going to last for, but I think it's totally true. I think you see the entire sort of sector trading as one, despite there being, I would argue, pretty significant differences between different software companies in terms of how they are taking on AI. It's an amazingly powerful technology transformation that we're going through, and every software company is challenged to take this new intelligence, this new electricity, if you want to call it, and how they deploy it to their customers to help them solve the problems that presumably they were solving beforehand in new and innovative ways. Some are going to do that very well. I think we've shown amazing results in all of our AI statistics, and some are probably going to struggle with that. But it'll take time to differentiate the winners from the losers.
More white-collar workers. You just said that. That's not what we're seeing at the moment. Why do you think that's going to be the case? Like if you are a 22-year-old kid at the moment and you're looking for a white-collar job, they're quite hard to come by.
I think you're seeing the existing ways of working changing really rapidly as we see any major technological change. The creativity, the unleashing of potential that comes with AI in terms of doing white-collar work, the ability to process information in new and innovative ways is only going to lead to many more jobs, right? If you look at it in terms of how we think about the world, we enable our customers to manage teams, to collaborate, to run workflows across their organizations. We can do that in ways that we never could have beforehand, which will unleash a lot of possibility for them to make their businesses more competitive.
Good morning, Mike. So does that mean, I thought that you had also, just like some other companies, been cutting jobs not that long ago. There is no connection with AI there then when you cut jobs?
Not in the way that people point out. We continue to try to adapt our skill mix, right? We are doing very well in the AI area in terms of our investments and very well in enterprise sales as we grow continually in the enterprise. We're now north of 600 customers of over $1 million a year in revenue. And so we needed to adjust our skill mix to having more people in those areas for sure. You could argue that's driven by the AI transformation. It's partly true, but it's not in the way that people sort of apply this very simple lack of nuanced view of what AI is doing in terms of affecting jobs.
And so, I mean, in terms of what, are we just going to see more churn in labour markets? And it's not for you to sort of speak to the whole labour market story, I suppose, but given that you say there's going to be more white-collar jobs, and that's not an argument that we hear from a lot of people, is there just going to be a lot of churn, but in the end, higher numbers?
I think you will see some amount of churn. Again, we've seen increasing job figures, like if you look at software development jobs around the world, if you look at product management jobs, design jobs, there's quite a lot of robustness and strength in those job numbers.
So even in software development, which is sort of the epicentre of where you think you can take headcount out if you're so minded to?
I mean, I might argue it's not the epicenter of where you would take headcount out if you were looking for, if you were so minded to. But certainly if you look at the US figures, right, those the job openings in those areas are very, very strong over the last quarter or two. AI makes certain things far cheaper to do, but that also means you can do far more of that. And you still require quite a lot of smarts to power it, right? I think it depends on whether you think of AI as mechanistic or like an instrument that you have to learn to play, and does it make a great software developer even greater? I would argue it does.
Mike, in the conversation about margins earlier, you talked about the cost of AI. Where are we in that story? Are you model agnostic? Are you looking to more open source models? Frontier is becoming too costly. How do you think that dynamic changes? Do you think you adopt more open source? Do you think that becomes more of a trend to try and drive down costs of AI?
Great question. Look, we are, I wouldn't say we're model agnostic. We have great relationships with all of the large foundation labs. It is our job, I would say, to deliver outcomes for our customers. And so as we're delivering those outcomes from customers, often in the early times, the foundation model is the easiest way to achieve that. Once you understand what it is the customer's trying to achieve at some scale, you can go look at managing your costs, as we always have done with storage, with compute, with anything else. So we blend models. We run about 75 different models in production now to tens of millions of people. But it's our job to deliver the outcome, right? They want an answer, they want quality, they want speed. We constantly are blending models in different ways to give them the best answer that they can within their customer parameters. So some customers will have very strict parameters about what models they're allowed to use. And it's up to us to do that and to deliver that value to them.
What we're hearing from a lot of companies, though, is that we started off using a lot of tokens, and now we're being more careful in the tokens that we're using. Is that fair to describe what you're seeing as well?
Absolutely, yes. More tokens doesn't mean a better result. I think we go through different phases, right? So if you think about the talent problem here, we have to encourage people to use AI. They have to see value in that. That is most trivially measured as the number of tokens they use. Yeah. And then we run into this problem of, well, these tokens are really expensive, so use less tokens. Neither of those is correct, right? It's about what answers are you getting for the amount of tokens you're using, the amount of spend you're giving. If you think of it as economics. We have the best knowledge graph in the world of enterprise SaaS. It's one of the things that we're doing really well at the moment. It's a very strong story for our customers. the more context you give to any model, the better answers you'll get, the higher quality of answer or the faster answer or a far cheaper answer. So we continue to demonstrate to our customers how we can reduce their token costs while giving themselves better answers. And this is the optimization that we're just going to see in technology continuing, as it's our job to help them get the best answer in the quickest time for the least amount of money across all of the knowledge they have in their organization.
Can I ask you about AI agents and what that does to the workforce, Mike? Because so we talked about the white-collar workers and managing those and what you think the dynamics will be there. But you also talk about how enterprises are really changing because AI agents are entering the workforce. What does it mean to manage AI agents? Give us some insight into how it changes the thinking about the talent pool and the resources that you have at hand.
Look, you have lots of different types of AI agents, right? I think the ones we're seeing the most at the moment are in two different categories. First is what I would call personal agents. So things that let somebody do their job far better than they could have ever done it beforehand, right? So an individual managing a small team of agents, if you like, that enable them to do their existing job at a far higher quality or with more speed, more output, often doing things twice so they can check that it happens. So there's a personal agent category. And then you see a lot of agents in sort of automated workflows where they're helping move work around or along an organization. They tend to be pretty different. In both cases, you're getting hopefully a better quality outcome. And you're enabling the human beings to do their job at a higher level of creativity or output, focus often on less of the boring things they don't enjoy about the job. And one of our parts of our mission as a company is to help that human AI collaboration. Like, we don't believe in the story that AI is just going to do the job for you. I think it's going to help you to do that job. It's going to drive you in certain directions. It's going to help you get towards the destination. And we focus very much on how we help the human and AI collaboration to happen to enable the team of people to be more successful.
Mike, very briefly, before we let you go, there's an argument that teams across enterprise and smaller companies can just vibe code their software. Do you think vibe coding is reaching a ceiling, or is there a ceiling to vibe coding?
I think vibe coding is enabling the creation of technology to be at a far greater rate, which is wonderful. Technology comes in lots of different places, though, right? I'm not going to vibe code my core application set. I'm going to use a lot of that with highly skilled engineers to enable me to be more productive in building out those core applications. That said, I have lots of people in finance and HR, for example, who are vibe coding solutions to the problems they have. They are technically writing software, but it's software to help them do their job, run a more complex financial model than they could have done in Excel or something. There's a great solution set there. I'm not sure I would call those people software engineers per se. They're not getting woken up at 2 a.m. when something's down by a pager. But it does increase the breadth. It's what we're seeing with it. The amount of technology being created is going up at a massive rate.
You're still using pages?
We're not still using technical pages. No. We still think of them as pages, but
maybe
it's a mobile phone they have nowadays.
Maybe you just wake the AI agents now at 2 a.m. I feel
That's
like
right.
they might be a lot more understanding. That's the kind of resilience the system needs.
They might help you do a little bit of that job, but again, in terms of collaboration, if they can solve the problem, it's probably pretty trivial. And then they don't wake people up for the trivial ones. That's great.
OK, Mike, I'm just reaching for my pager. Thank you very much indeed. Really great to get you in the studio and for your insights. Mike Cannon-Brookes, of course, Atlassian co-founder and CEO.
Coming up, Iran is doubling down on its plans to control shipping through the Strait of Hormuz. What does this mean for peace talks and the future of this critical waterway? We will discuss that next. This is Bloomberg.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran.
President Trump speaking in the Oval Office just yesterday, talking about the conversations that will take place in Doha then. Those comments come amid confusion over the next round of US-Iran talks, with conflicting messages over whether negotiations will actually take place in Doha today or who will talk to whom. Iran has reiterated its determination to maintain control over maritime traffic moving through the Strait of Hormuz. For more, let's bring in Bloomberg's Brendan Murray, who leads our global trade coverage. And we've got a number of trade themes to work through with you this morning, Brendan. But let's start with the impact of the war in the Middle East and how things are in the Strait. We see constant reference from Iran to their wanting to impose some sort of tariffs after the 60 days are over. But how do things stand at the moment? Are things moving through?
Yeah, exactly. So President Trump, believes that militarily that the U.S. has been victorious against Iran, but economically, Iran is still clinging to this idea that it can control shipping flows through the Strait of Hormuz, and we've seen over the past week that they can fire some projectiles at ships and cause traffic to shut down. And so we are seeing oil tankers starting to flow through again over the past couple of days. But if Iran can control this idea that it has a say over the amount of supplies that get in and out of the Persian Gulf, then we're in for a longer term sort of cloud over the economic implications of the region. And we've seen some container ships come out recently, but they're much more reluctant. And so there is just a general sort of a cloud of uncertainty that we don't know how this is going to play out and get back to normal anytime soon.
Who's reluctant? Is it the ship captains? Is it the ship owners? Is it their insurers?
Well, it would ultimately come down to their insurers and whether they can cover the potential damage that they would be exposing themselves to. Obviously, the shipping companies are concerned about their crews and the multi hundreds of millions of dollars sometimes that are on board. So it will all those that calculus is playing out on every single vessel, and of course it depends on, do you have U.S. Navy escorting you? So there are a lot of variables here, and none of them are lining up yet to suggest that we're going to see normal flows through the Strait anytime soon.
Brendan, thank you very much indeed. Brendan Murray with the trade flow story, of course, and the continued tensions around the Strait of Hormuz. Those talks expected, of course, in Doha later today between the U.S. and Iran. Let's look at So what else we are thinking about today. Those talks then, as I've mentioned, in focus. We'll bring you any lines as they cross. Meanwhile, the UK's defence investment plan will be announced at 10 a.m. UK time. We're going to get Italian June CPI inflation and Germany's June CPI later at 1 p.m. and at 3 p.m. US consumer confidence. And on the labour market, the JOLTS data, so the job openings data. And on the earnings story, we're going to get numbers and an update from Nike with a touch there on the US and global consumer.
OK, what's going on in the markets? Scarlett's here to tell us. Quarter end, which is quite interesting. And you've got technology stocks on the move once again. What are you watching this morning?
Yeah, I mean, I think maybe the most interesting thing is the move in dollar yen, actually, because we've broken that kind of multi-decade high in dollar yen. And I really think it can go higher, particularly in the next couple of days, because when you think about what the incentives are from the monetary authority's perspective, it's you don't have an unlimited amount of foreign FX to sell, right? So you want to get bang for your buck. And you know there's a couple of event risks in the next few days, including Warsh's speaking tomorrow. You have non-farm payrolls on Thursday that are expected to be quite strong, and those could be quite dollar bullish. And so you don't want to have to come in multiple times to defend that line. You want kind of one big move that hopefully squeezes short sellers. So I'd rather wait till Friday when it's a U.S. holiday and there's thinner liquidity.
What else do you make from what we've heard? We're going to play some Philip Lane sound shortly, but before we get to that, as we think about how other central bankers size up Warsh, and particularly the Supreme Court ruling, is Fed independence now assured? Is that story now behind us? And what does that do to the dollar going forward?
Yeah, I mean, it's completely in the rearview mirror is what I would say in terms of you didn't get a big reaction whatsoever to Lisa Cook. The market's telling you that we're not worried about inflation in the long term, and perhaps in a concerning way in terms of you have break-evens so low further out, or even 2 years, 10-year break-evens. They're at levels that are quite low even for the inflation that we've had in the past 2 years. And the market's telling you that we're going to get hikes this year, that they believe in the inflation-fighting credibility of the Fed, particularly with Warsh at the helm, because that yield rise has been driven by reals rather than inflation. So the idea being that you get curve flattening with the front end rising as you hike, that weighs on growth and inflation at the long end. And that's very much the messaging you're getting across markets, especially too from debasement trades like gold, like Bitcoin.
As Tom suggested, we've been hearing a lot from Sintra, so let's get to recap a little bit of what we heard there. We've been hearing from the ECB in many guises this morning, but the chief economist Philip Lane spoke to us earlier and he shared his outlook on inflation.
I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like, fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty.
Skylar, we've been hearing a lot from Sintra. Is anything moving the dial? I mean, one of the conversations going into this is, was it one and done from the ECB? And if so, was that the right move? Maybe that's a bit too backward looking. I should be looking forward. What's catching your eye out of Sintra?
Yeah, I mean, I think the bias from policymakers is to go with this idea that we still have quite a lot of uncertainty around Hormuz opening, how that feeds into actual flows. But what we've seen is that commodity prices are much lower now than they were a month ago. And so I'm looking for that commentary. You know, are we recognizing that? I think particularly for the ECB, Lagarde shifted more that way. And you have very sticky pricing for the ECB in terms of one more hike expected this year. And so I think, you know, if the bias is to not move against that, particularly from a policy perspective for the speakers that you're getting, then you need to be watching the data. And inflation data is already coming in lower because gasoline prices are coming down. And we'll watch the headline print for Europe tomorrow, but that's what I'll be watching, data rather than speakers.
Skylar, thank you very much indeed. Skylar Montgomery-Koning from our Markets Live team as we continue to keep across what's happening, of course, in Sintra, in Portugal, Warsh there tomorrow. As Skylar was saying, let's switch focus right now to the upsets coming through from the World Cup, arguably the biggest beast to fall. And this is pretty historic for Germany. Yeah. Of course, losing to Paraguay and penalties. This is the first time in World Cup history that Germany has lost on penalties out in the last 32.
I always get nervous when Germany's involved in a penalty shootout. I have sort of history.
PTSD.
We all have, yes, with that. So it's a holiday in Paraguay today. They've called it a national holiday because of the fact that they beat Germany on penalties. Yeah. But the Netherlands is out as well. Japan got knocked out.
Yes, although at least Japan was spared the penalties. I don't know if that's good or
late
bad.
Goal.
Very late goal. Maybe that feels unfair. Maybe they would have liked the extra time. They didn't get a chance.
All the goals are coming at the end of the games. So you've got to stay up to the end of the game to get the kind of the action.
France plays today, don't they? Which
we're playing tomorrow at 5 o'clock.
Very late. And the England game is much earlier, so that's excellent news for us. Very selfishly.
Yes, 5 p.m?
Yeah, I think it's 5 o'clock, yeah.
Democratic Republic of Congo.
Yes.
Versus England.
Yes.
Please don't get to penalties on that one.
No, we're not sure we've got it in us. We're not strong enough. Right, 8:56 here in London. That is it for the opening trade. The Pulse is up next. Lots of coverage coming from Sintra. We will leave you with these European equity markets on the front foot this morning. This is Bloomberg.